Did we stop investing in stocks because there were a lot of scammers in, the 1920s? No. How about in the 1970s when we had the savings and loan crisis and, I guess it was 1980s, and the savings and loan crisis, and, we stopped investing in stocks? No. Or how about the global financial crisis when the big banks, right, the banks that we trusted were scamming us with CLOs and CDOs and, slicing and dicing, the big short? Nope, we didn't stop. Yeah. And yet, when people talk about crypto, they're like, oh, yeah, you had a bear market last year. Yeah, and year to date, this year, it's up almost 100%. And it is, again, for the 11th out of 14. It's only been in existence for 14 years. Bitcoin's only been an asset for 14 years. And 11 of those 14 years, it's been the number one performing asset.
Today, we have Mark Yusko discussing a major turn of events coming to Bitcoin and how the crypto market will be turned upside down in the last few months of the year. Yusko predicts that Bitcoin's market cap will reach $6 trillion, which will bring the price to $300,000 per coin. He also believes that Bitcoin's value will continue to rise exponentially after the halving event of 2024. Yusko also stresses the importance of Bitcoin as a hedge against inflation and draws attention to how governments' monetary policies have led to the devaluation of fiat currencies over time, impacting the purchasing power of money. In contrast, Bitcoin's limited supply makes it an attractive alternative investment for those seeking to preserve their wealth. Unlike traditional fiat currencies, Bitcoin operates on a decentralized blockchain, making it a unique and superior form of money. The fixed supply, combined with a massive increase in demand, is expected to lead to significant price appreciation. Let's get into the latest interview with Mark Yusko, where he shares his insights on the future price of Bitcoin and how cryptocurrency and the role of money will be completely transformed in the coming months. Also, we have just partnered with our friends over at Jamie Tree Finance, who have just launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. So to give out as much value to you as possible, we're sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
The banking crisis, remember Yellen, like 4 or 5 years ago, said there'll never be another crisis in her lifetime? Just clearly silly, right? I mean, it's cyclical, and as sure as the sun sets and rises, there was going to be another financial crisis. And the more people say it's contained or it's over, the more you know it's not, right? So, first you had Yellen say it wasn't going to happen, and then it happened. Then you had Powell say, well, it's totally contained. And then 2 more banks failed. And then you had the president say, definitely perfectly healthy, everything's good. Nope. So the first thing that happened is the banks had the crisis in 2009. And what happened? Fed lowered interest rates to 0 and said, all right, we'll re-liquefy the banking system by lending you money. Okay. So we'll lend you money for 0. You take that money and you buy bonds. Okay. Government bonds. Okay. Now, why would they do that? Well, because it was a free arbitrage, right? If you borrow at 0 and you get paid 3, you can lever that up 10, 11, 12 times and you make a lot of money. Crypto is opt-out, right? It's an opt-out mechanism. It allows you to opt out with a portion of your wealth from the fiat fiasco. What is the fiat fiasco? Well, following the Knickerbocker Trust debacle in 1907, John D. Rockefeller and J.P. Morgan concocted a scheme with John D. Rockefeller's father-in-law, Amory Aldrich, to launch the Federal Reserve. But what was the Federal Reserve? Okay, the Federal Reserve was a plan to create a federal, not government, but a private corporation. This is the funny thing. The Federal Reserve is neither federal nor has any reserves, right? It's not a government entity. It's not owned by the government, and it has no reserves. It's not a bank. It is literally a private corporation modeled after what? Modeled after the Bank of England, which is modeled after what? Modeled after the Netherlands National Bank, which was created by the Rothschilds in 1607. For what? To create money out of thin air. We have this weird dynamic that the Fed exists to steal the wealth of the masses through this thing called inflation. Inflation is not good for us. So what happened? All of the graft and corruption of the savings and loan crisis and the first banking crisis in the 90s and the second banking crisis, global financial crisis in 2009. So January 3rd, 2009, Bitcoin is born.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Yusko asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment. With a giant spotlight on Bitcoin ETFs, Yusko highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF.
Now, why was it born on that day? And why is the first image on the Bitcoin blockchain, in the Genesis block, a photograph of, or JPEG, of the Financial Times, Chancellor on the brink of second bailout for banks? Well, that is, again, a commentary, social commentary on why Bitcoin needed to be created. It needed to give us a way to take our fiat, convert it into something that is no longer inflationary, can't be devalued because there's a finite supply, it's scarce. That deflationary asset allows us to protect ourselves against this fiat fiasco. It means we can create fiat out of thin air. So fast forward to today, what are the implications? Well, the banks reliquefied themselves. Then these other competitors rose up and they were threatening the guys at the top again. So what do? They foment fear and create a reverse bank run. So all the money flows back up to the top banks. Why? Central bank digital currencies. Well, what's a central bank digital currency? Central bank digital currency is not Bitcoin. It's not Ethereum. A central bank digital currency is a closed, centralized ledger that is a surveillance tool and a control tool. So it's all the worst things about fiat money, inflation oriented, can be devalued by decree, plus programmability and control. I mean, it's a living nightmare and surveillance. Bitcoin has held up, as you said, really well, right? We got the second and third largest bank collapses in history, and Bitcoin's up. What's going to happen to Bitcoin? Everybody would have said, oh, it'll be down 50%. It'll go to zero. Peter Schiff would have been saying, oh, it'll definitely be zero then. Here's the thing. Over the last 10 years, gold is down and Bitcoin's up about, it's like 850%. So gold is down and Bitcoin's up 850%. So something's broken in that model, but the money keeps getting worse.
Yusko anticipates that the crypto summer will continue its scorching run until June of the following year. As we stand on the precipice of fall 2023, merely a month away, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.